going to give you a list of accounts, and we're going to then categorize them into the appropriate category in the general ledger. Okay? Now, you might recall from our discussion yesterday and the day before that the general ledger is known as the final book of entry, right? And it's broken into 4 primary categories. What are those categories? Assets, liabilities, accruals, and capital sections, okay? Now, if you'll turn to page 5.2, you'll see a representation of that general ledger. Now, the last couple days, we've seen the general ledger like this. Assets, liabilities, accruals, and capital. Now, on the other day, we talked about further subdividing the assets into 3 subcategories of assets, right? What were those 3 subcategories? We had current assets. Good. What else? Fixed assets. And finally, the third one is other. So, when we have a list of a bunch of assets, we need to determine which of these subcategories those assets are going to go into. Furthermore, we had 2 categories of liabilities. What were those? Current and long-term. So when we've got liabilities, we need to categorize whether they're current or long-term. Now, let's look back on current assets. How do we define current assets? It's something we own that we expect to turn into cash within the next 12 months or a year or less, right? So if we have something, if it's something we own, it's an asset. Then we say, are we going to turn it into cash in the next 12 months? If we are, it's a current asset, okay? Now, if it doesn't meet that, then we look at the next category, fixed assets. What are the 4 characteristics of fixed assets? Tangible, good. Not inventory, material and value, more than $300, and expected life greater than a year, okay? Now, if it's an asset and it's not current and it doesn't fit those 4 characteristics, then what is it? Other asset, okay? Do you see that process? So first you ask yourself, is it an asset? Is it a liability? Is it an accrual or capital account? And then once you figure out which category it's going to go in, then you've got to look at which subcategory within that, okay? Now, name some assets that you have personally. Cash in the bank. Is it a current asset or a fixed asset or other asset? It's a current asset, right? What else? Car. Current asset, fixed asset, or other asset? Fixed asset. Why? Because it's not going to turn into cash in the next 12 months, right? Good. Okay. What else? Give me another asset. A house. Current, fixed, or other? Fixed. Another asset. Furniture. Current, fixed, or other? Fixed. Only if you plan on, you bought it to yeah. What else? An IRA. Okay. Current, fixed, or other? Good. Good. It's another. Why? You don't plan on turning it into cash in the next 12 months, right? Now, however, let me tell you an exception to this. If it's available to take out at any time, like a savings, even though you don't intend to do that, it's current. It's only if if it's something you can't touch, like a long-term CD or something like that, you know, that you won't be turning it into cash in the next 12 months. Okay? What else? Any others? Those are some good examples. Do you see what we're trying to do here? Okay, now liabilities. Got current, long-term, right? Name some debts that you have. Credit card debts, current or long-term? Current. Sometimes they might say. Okay, what else? What other debt? Huh? Phone bill. Current or long-term? Current. Okay, name some more. Mortgage, current or long-term? Probably long-term. Okay? Car loan, right? Probably long term, right? Okay, you get the idea there? Now, what's the purpose of the accrual accounts? It's to mark down the assets, right? Depreciation marks down what type of asset? Fixed assets. What's the other accrual account we talked about yesterday? Bad debt allowance. Which account does it mark down? Accounts receivable, which is a current asset, right? Okay. Okay, and then we have the capital section. Now, we specifically identified the capital accounts last night or yesterday, right? In a proprietorship, what are the three capital accounts? Owner's investment or equity, owner's draws, earnings. In a partnership, what are the capital accounts? Separate equity accounts for each partner, separate drawing accounts for each partner, and earnings. In a corporation, what accounts? Common stock, retained earnings, and earnings. Now, you will see in one of the exercises that we work with that there are two accounts that we showed them on the board yesterday, but I crossed through them because they're unusual. Paid in capital is also a corporate account in the capital section, and also preferred stock is a corporate capital account. But they are so unusual in small corporations, I didn't want to take the time last night. But you might, on occasion, you'll see them in big corporations, very commonly. Big corporations, but not small. Okay, with that, I'd like you, in looking at page 5.2, I want you to notice that the accounts are listed down the left-hand side. And we want to identify which section each of these accounts are going to go into. So when we look at the first one, it's partner number 1 investment account. Which category does that go into in the general ledger? Capital. So under the capital section, just put a number 1 down there. Okay? You don't need to write out the name. Save you a minute to just write down the number. And then accounts payable, number 2. Which account category does that go into? Current liabilities. So put a 2 under current liabilities. Go ahead now and continue on down those 20 accounts, identifying the category that they go into, and then stop.
Complete Learning Activity 5.1, found on page 5.2. Once completed, check your answers with the appendix, page A.2.